Hi everyone, August Pinias with Real Estate Investing Demystified. We're here in Las Vegas at the Multifamily Wells Project Conference, and we're with our good friend Colm McEvilly.
Very good friend.
And Colm, tell us what brings you to the conference. I believe your speaker says it right there on your stuff. What are you speaking about? Tell us about your what you're doing here at this conference.
So I'm here to help people get some deals in 2023. Specifically, I deal with the investor relations, so I'm going to be talking about maybe investor funnels, implementing AI strategies into that funnels, conversions, and maybe some social media marketing. Specifically, I want to talk about how to build a super fan and a group of like a community of super fan investors, because it's really important for you to do that right now when we're in a lull of finding deals with the increased asset prices.
Yes.
I mean, think about where we're at. So we have increased high asset prices. We have downward pressure of really restricted lending standards, and that's going to make it hard to get deals to pencil. And so you take that, and that could potentially cause a lull in the deals. And how do you keep your investors engaged during that time? And those are some of the things that I'm going to talk about.
Awesome. I've known about your journey. I've known you for a long time. You were, I wouldn't say single-handedly.
You definitely have known me for a long time and been very supportive of me.
Absolutely.
Before COVID, yes.
All love, man. But what I was going to say is that I've personally watched you really, I would say almost single-handedly when it comes to the investor relations side, build two great companies. And now currently you're a free agent, I believe. But you still speak about this investor relations.
I helped implement some strategies. I'm a very creative person, but yeah, I basically helped raise about $160 million from retail investors, but I was part of the team.
Yes.
So I think what happens is you have some really good list builders. You have some people that are really good at the middle of the funnel, and then I'm fantastic at nurturing that relationship and making sure that investor is reinvesting every time, and I know exactly what they're looking for.
Absolutely. So just to go over that, just for people who might not fully understand the process. So you create, some content. Somehow you get the attention of the investor. So the investor gets to know who you are, and the investor comes into the funnel. At some point, you also need to create the like and the trust. So the investor ends up investing with you and understands about the firm and your business model and the strategy. At some point, they need to speak with someone who's representing the firm. And a lot of times you've basically played that role to create that trust. So it's an extremely important role to play within these real estate private equity firms. And you've done a tremendous job as you talked about. But talk to us about, right now what you see about the market. I think our CEO, Ava Benesaki, always talks about this. Is like the engines for raising capital should never be turned off. What is your advice to other groups? Should they still be out there trying to connect with investors? How should they nurture those leads if they have no deals? That's something we're encountering. We've had investors messaging us, emailing us, saying where are the deals because their money is sitting in the bank, eroding to inflation. Talk to us about the nurture process currently.
Yeah, so two things I want to talk about. One, there's a joke said by one of my old mentors that Colm McEvilly got it right with fixed long-term debt. I think most of the bad deals that are going to be coming out in Q3, Q4 were purchased 2021, 2022. If you bought something before 2019, you're probably fine. But really building on your question is how do you make it so that they don't forget about you, right? And so part of that is how are you building the process in your organization to have a ton of tags so that you can, when you come across data or information that comes up that's local to that particular investor, you have automations that automatically trigger you to reach out to that investor for something specific. So here's an example. So let's say that there's a new law that's going down in a market that's going to affect an investor. It's not even related to an investment you have. But this is an excuse to reach out and touch that investor so that when you call them, they pick up the phone and they think, oh my gosh, Ava's calling me, August is calling me, there's got to be something of value. Because the last 3 times they called me, they weren't trying to pitch me on a deal. I can trust that when I pick up this phone, there's going to be something of value of this conversation.
Got it.
Show up and add value.
What a great point, man. What a great point. No, so rather than just pitching people, connecting with an investor, not talking to them for months and then calling them for a deal, rather than that, have multiple points of contact, be on calls with them, build that trust, and add value along the way.
So this is what I think. Right now, people are trying to cut their funds, their operating funds, because deals are becoming harder to find. I think right now, more than ever, people should be building their marketing and really, because Q3, Q4, we're going to hit it hard. I think especially if we make it through the next year, we're going to make it through the next year. But I mean, when I say if is if you can keep the investor sentiment. There's sheep-like nature of investors. One of the things I've noticed in the last couple months is that investors are willing to trade the upside for security. And what I mean by that is if you did a fund in 2021, 2022, and you said, hey, I'll give you a 5% return or a 7% preferred return, and then we'll do a 70-30 split. That was really attractive in 2021, 2022, 2020, 2019, when investors were really bullish on the back end returns. Now they're not so bullish, but what you can say is, hey, let me give you like a 12% preferred return and with no back end, or a 13% return with no back end. And what that does is it allows the investor to say, okay, at least I'm getting that, which is better than inflation, it's better than stocks, plus I get the tax benefits. And then you tell the investor, you say, hey, Mr. Investor, or Mrs. You say, hey, Mr. Investor, I believe in this deal so much that I'm willing to eat the risk here. That's how much I believe in this deal. I guarantee I can get you this type of cash flow and this type of returns in a market that isn't providing that anywhere else. But this particular property has something unique that allows us to add value when most people can't.
Amazing. Talk to us about, there's a lot to unfold there, but talk to us about you have your finger on the pulse of our space. Yeah. Is it true that they're saying that there's deals that are distressed deals coming to the market? We saw what's happening with the Houston project with what was it, 3,000 doors or something insane?
I think those were Dallas. I won't say the name. It was $230 million in assets. The guy disappeared. He took what we assume is the reserves. He took what we assume was the acquisition money. That's a real smear on our industry. It's really sad. But what I think is happening is, and actually John Brixton's here I don't know if he's still with Old Capital, but he used to work with my old firm, Grow Capitus, and but I'm going to talk to him about that. Yes. What I actually think is people that are making the bad mistakes that they made. Let's say we got into debt without maybe putting a rate cap on it. Those are the same people that probably don't believe they're in trouble yet. And I have an inside source with another company that they sent out 150 feelers to groups just in a large metro in Texas, and 0 responses on whether or not those people that are going to have the term of their debts coming up, right?
Got it. So when you say groups, you're talking about investment groups, syndicators.
There's a syndicator that I'm aware of. He sent out 150 feelers. Nobody responded. I think 2 months from now, they're going to start getting responses. And the whole thing is that the people that made those mistakes of not situating the debt right, because operationally the investment's sound, but just in the way that the rents increased, so have the operational costs. But then the debt's really killing them. And so what's happening is you're making the mistake on the front end when you buy, you're probably making the same mistake that you're not in trouble yet. So that's why I think Q3, Q4 is a time where you as a syndicator, you have to decide, do I want to try to get into a deal now, or do I want to get into a deal in Q3, Q4 when there might be a little bit more opportunity? But again, private equity is only 3 to 5% of the full industry.
That's right.
So the whole industry is not going to collapse. But there might be some one-off deals that are going to pop off because these amateurs that came in when real estate was really attractive, and piggies get fed, hogs get slaughtered. Everybody knows that, right?
That's right.
There's some hogs out there,
yes.
And I think in a couple months they're going to know that the butcher's calling.
Awesome. Really appreciate it, man. Thanks for taking the time.
Absolutely.
Let people know how they can connect with you. Maybe they can, secure your services for consulting or what have you, or whatever you do these days.
So if you want to contact me, Colm at tgaip.com, COLM at tgaip.com, or August Ava. They've been extremely supportive of me for multiple years now. Believed in me when I didn't believe in myself, and
absolutely,
we'll be collaborating.
We'll put it in the show notes as well, so how to connect with you. Thanks, man.
Thank you.
Great to see you.